My name is Mona Abdullaham. I'm a Group CEO of Sustainable Square. I'm here today with you as a board member of the SAS, which is Sustainable Action Society, as part of the Capital Club. I'm here with you today to lead a panel discussion or to moderate a panel discussion around the very, very, very important topic that is booming around the market. There's a lot of debate, a lot of going on happening in the field of disclosure and reporting, in the field of ESG and sustainability. And we thought of organizing these monthly events, bringing very highly intellectual and smart and practical leaders and thought leaders in this field in the region to kind of uncover or enlighten you about what's going on in the field of ESG and sustainability reporting and disclosure and rating. And let me ask and start with the basics here, because some people that are very curious to understand what is ESG disclosure, what is ESG sustainability, what is a sustainability report, right? May I start with you, Maali? Why do I have to report as a private sector or as a company on a sustainability report? Why do I have to issue that document?
Okay, starting really at the basics. First of all, thank you very much, ma'am, for thinking of me and for having me on this panel. And it's just wonderful. And thank you all for being here. ESG reporting, we were just touching on that before the session started. Essentially, it is to show what are you doing in this respect, okay? The report in and of itself is not the end product. It is the journey of ESG, sustainability, that an organization is undertaking. I've worked with clients that want perfection from year one. It doesn't happen, okay? And everybody has their own story to say, doing what applies to them. Not everything applies to everyone. So if you're industrial, it's not the same as if you're, a paper mill. If you're working with humans, there's a key social element you need to focus on. So it just depends on what the organization is and what is its ESG journey, and that report embodies the journey that they're taking and the results, if any, that they're achieving, or challenges. I think people also forget that the report is to highlight challenges that companies face, to engage stakeholders, to help identify solutions. It's not meant to be a one-way conversation.
Maali, you've been doing this for more than 16 years, 17 years in the region. What were the challenges and the resistance? I'm sure you've got a lot of resistance from the private sector when you enter a room and you try to convince them that this is a good thing for you and it makes sense to your investors, to your stakeholders and everything. Tell us about that story.
I think there's two sides to that coin. On one side, I truly believe, and please, anyone, correct me if I'm wrong, being in this part of the world, I believe sustainability or certain ESG principles are actually embedded in our DNA. Culturally, we care about our neighbors, we care about our people, we care about our communities. So it's not something that companies felt that, oh, it's something I have to do. We do it anyway. But helping organizations identify and measure that the value that this brings was the challenge. Showing them that, yes, you're doing this out of the kindness of your heart, but you know what, if you do it a bit more strategically, the return is 10 times more. So that was the one challenge. On the other end of the spectrum, you get the why. Why should I? I can't say I got many of the whys, because I think, again, I believe everybody's inherently good. It's just finding the tools on how to translate that goodness. When you get the why, I always say sustainability is not a nice to have. It is an integral business tool for growth. And the minute you shift that mindset of, it's not nice, it's not just the frill benefit, it's not just the PR stunt, if it's integral to your business, it is a business tool, just like, we use digital transformation today, just like any other tool that you use in your work, sustainability can be that if leveraged properly.
Ali, the good news, Razi, was on board from day one, because he was the first ever in the MENA region to dare to go for producing a sustainability report and pushing disclosure around his ESG, environmental, social, and governance data, to produce the first sustainability report aligned with the GRI in the region. How did he come up with this? And why did he go for this? Back in 2006, by the way.
Okay, well, first of all, thank you very much for including us in such a great panel, and well, good morning to everybody. As a company, we started looking at mostly social things since day one, since the establishment of the company. So we've been doing social since 1982. 2005, the founder and CEO at that time, Fadi Andour, came and says, listen, we don't want to be any more reactive to what comes to us. Let's go and be proactive and create our own initiatives that we can support communities. That was 2005, where we created Ruwad in Jordan, and we started supporting communities at that time. And we were looking at international standards. And I'm not sure if everybody knows, we were the first company from the region to be listed on NASDAQ in 1996. So we know the international requirements and where the stock markets are heading since 10 years before issuing the report. So 2006, we started looking at how we can report, and the purpose of the report at that time was not just to show what we are doing. The purpose of the report is basically planning and measuring against the plans that we are putting. So we looked at it as a measurement tool rather than just a report that we provide to stakeholders. And the report at that time was beneficial for mainly international stakeholders who really care about such companies and they want to deal with us. Currently, it's totally a different ballgame. It's not anymore something nice that we do, to show the stakeholders that we are there, because my clients are pushing me hard to do that. And if I didn't start early, it was going to be extremely tough for me to comply to the requirements that are coming from clients. Stock markets are pushing that, regulators are pushing that, competitors are pushing. So if I want to be able to compete in such market, I need to be ready. Sustainability is not something you do aside by the way. You don't create a sustainability team and you tell them, listen, these are your goals. Sustainability is part of your day-to-day work. Sustainability is part of your office helpers' day-to-day work and your CEO's day-to-day work. It goes all over the company in different means. And one small thing that I wanted to mention as well here is that any project that you do in environment, irrespective of what it is, it would have immediate positive impact on your balance sheet immediately.
Let me just ask Fahima, before the mandate, before we come close to the mandate, right? What were the early discussions around ESG? You were in the stock market and people started talking about sustainability and reporting, or probably pushing you, please mandate it, or please come up with a regulation around it. If you enlighten us about that conversation before, how did you accept it or how did you react to it?
Okay, thank you very much, Eminem, for this opportunity. And I think Maali and Raji actually they covered it very well when they said that it is actually embedded in your DNA. In terms of people, it was very surprising when we started. I mean, as a stock market, or also as some of the listed companies that already had it, and the others who wanted to do, they were surprised that it is there already. I totally agree with them that we were doing a lot of stuff in ESG, but they were fragmented across different divisions. And I'm going to speak maybe more practical here, is that what we have noticed is that it's not about the report, it's how you are going to find out and dig into the information and the practices that the company does into one document, which is going to be more of your overall strategy, as you can say. So I believe that the challenge for the companies was not in what they were doing as much as in how to do it, and how you are actually going to engage a team that is going to gather information from different divisions to put it into one document. The other challenge that we have noticed during this time was also the buying in of the management. And I'm sure if I ask everyone here, they will all raise their hands. How you get the management support your sustainability, to have a sustainability team, to ensure that the information, the presentation that they are giving for the company and the gathering information in their daily targets and KPIs are important. I think that's where we are now ending up. At the beginning, it wasn't there, but now you will see even corporates are actually moving towards ensuring that the company has a proper KPIs, a proper corporate strategy towards the ESG. I have seen this evolving, honestly, and I'm very delighted to say that ADX, which is the exchange I'm working currently now for, issued the first ESG report in the region, plus 90%, and this is a very high number if you talk about it, from, you know, like within 2 years. I mean, we have now 90% of listed companies, they actually issued sustainability reporting. It's one of the highest in the world. So you can imagine that the environment is shifted very fast. But is it all about reporting? I don't think so. You need the buy-in from the management. You need to ensure that the report is attractive enough for the result that it will bring, because at the end you will need investors to look into your company through these reports.
We'll come to that. We need to elaborate further on the mandate, because I'm sure Fahima can bring a lot of insights from the stock market itself. But let me go back
Sorry, Munam, but I just want to add one more info
Yes,
here,
please.
because you talked to me about the past experiences.
Yes.
When we did the ESG mandatory was in 2020, right? Yes. But in 2011, there was a mandatory things that also around the world it was not there, which is to have an IR mandatory in companies, in corporate, as part of corporate governance. So investor relation, for the first time globally, was actually mandated here in the UAE to become part of corporate governance. You will tell me, okay, what's the relation? Investor relation was very important, because that's the core, you know, where you actually need to have the bridge between the sustainability and the investor.
So you started by creating that
it
governance
much
structure
earlier,
that could
yes,
help this.
and also women on board and so many other stuff.
Perfect.
Yeah.
It is the management buy-in, and it comes from up down. If you hire a CSO now and put him in a company, and he or she struggles to even convince the people around them to go sustainability, forget it. It will not work. Again, to go back to the point, it has to be part of this process and not something be done outside.
Nice. Raji Maali, thanks to people like you that we are seeing this scene being developed here, because you've sweated, you know, to demonstrate the business case of sustainability reporting in the region, and you spent efforts, you know, into pushing it in the private sector. Then with the support of people like Fahima from the stock market, you know, they kind of push the regulation there. But let me just go back to then. You spent a lot of time to convince people with the business case of reporting and disclosure. But there was another confusion back to then, Maali, and remember, with the which standard should we follow? Which guide should we follow? GRI, SASB, TCFD right now, UNGC Global Compact, producing a COPE or a CDP report. So that confusion, how did you deal with it? And then what do you recommend to people or to companies that are here, you know, starting their sustainability journey to disclose? They would like to disclose. Which framework or which standard should they align with?
Short answer or long answer?
As you want.
It depends why. Because again, you're reporting for a purpose. What is your purpose? Who are you communicating to? And based on that, you can go through the reporting framework and identify which one is most suitable for your needs and your audience. But I think the short answer would be GRI is the most common reporting framework on a global scale. If you're focusing on a particular region, then there might be alternative, more appropriate reports. For example, if your stakeholders are mostly in the US or your investors are in the US, then maybe SASB is more appropriate, or an integrated report might be more appropriate. If you are purely focused on environment disclosures, then the CDP might be more appropriate, or the TCFD. I can never get that more acronyms out there. Or a mission, so SDGs reporting, or co-op. I mean, it goes on. But I think, again, why are you reporting? Who is your audience? And from there, you can identify the most appropriate reporting guideline.
Our report is now compliant with GRI, IR, SA 1000, A1000, SDGs, COP, you just name it, because we have stakeholders all over the world.
So it's possible in one document to just cross all the frameworks together.
Very simple. You just add the indices at the end, and you mention the pages, and you need to tweak a bit the report. So this way you comply with all the stakeholder requirements across the globe.
Now, let me pick on the increasing appetite from the investment community for the ESG data. I have a very good friend. He's a global CEO of a global bank, and he was telling me that he mentioned last year 70% of the roadshows that we have gone through, 80% of the questions they were around ESG. 80%. They squeezed me on ESG. which means there is an increasing appetite in the investment community about ESG data. So, Fahima, why investors are so keen today to push companies or aggressing or putting more pressure on companies to produce ESG data, to show them the ESG data, and how would that help building an equity story, a better equity story?
Yeah, you saw me, I got excited when you said about the roadshows because I have seen it with my eyes. I've seen it and we've calculated it actually. When roadshows year on year was happening, we identified the type of investors that used to meet us. And surprising to us that when we would check the comparison between the number of questions that they were coming on ESG in the latest 3-4 years roadshows and investment meetings, exactly, but maybe not 70%, but like sometimes it depends on the region, honestly. Like US could be a little bit different than UK because they're more strategic kind of questions on the US market, so maybe US more, and London maybe they will be more financial related question. I mean, even if it's ESG, but it's more financially related. Like one of the questions I was very much surprised that our CEO got at one point of time, that what do you do to keep them? How much do you pay to keep your people? Like the talents that you have, and those kind of questions we used to get indirectly about ESG. So it's very interesting what you have said. Investment, pension funds, big funds, now it's unlike before. Like it's been changing the matrix that they put, the framework that they put to, and that's why there is an integrated reporting, because a lot of their framework is based on financial and non-financial factors in order for them to put it through a voting for their portfolio investments. So you will see companies, I can give examples like BlackRock, we were just talking about them, and many others. They have mandates to how much of their framework should be in this area. So if they couldn't tick the box at that time, they cannot make the decision making. I've also heard that a lot of them is doing a type of a direct roadshow, like one-on-one meeting with the specific companies they like, because they were not happy with their information in the report that they have provided. So they were trying to guide the companies. They were saying, we love your company, but we need to hear more about your ESG reporting. So this practice is also happening. So I think companies should not shy away from actually targeting investors that they look into ESG and asking them, what do you really want to see? Because sometimes companies might be doing things, but they're not realizing that they're not disclosing about it or publishing it. What else I wanted to say? Information. I think information gap. There's a lot of... Exactly. So the information gap is something that is very popular now, and people actually need to look at what information I'm providing and what are the gaps, plus reflecting this in your investor presentation if you are already a listed company. But if you're a private company looking to become public company, then definitely I can say that 30% of the equity presentation now, from what I'm seeing, the companies that are looking to go public, they are having a couple of pages about what is their strategy in the future for ESG, climate change matters, information related to that, talking about the transmission of the business. For example, if they are in the oil sector and gas sector, how are they going to attract companies on the IPO if they don't have specific projects or transformation of their company into decarbonization? Yes, decarbonization of their portfolios. They will go into artificial intelligence, how they are going to move away from the conventional kind of sector into more of a sustainable business. That would actually attract the investors more than, and will make sure that the equity story or the IPO is successful. And it's not only us, we encourage that definitely, but the lead managers or the investment banks that will connect the companies with the investment world will definitely help the companies to shape their equity story, right?
Nice.
I'm so glad we're talking about ESG data. Okay, ESG data is very important. But let's not forget the purpose of ESG data, okay? Which is, in my humble opinion, impact, okay? Decision making as a result of ESG data. Just capturing and reporting ESG data is not the journey. What are you doing with that? How is it changing your business operations? how is it impacting your decision making? How is it even part of your decision making matrix? What is the impact of those ESG activities on which you're reporting? For example, would you rather a company that has really good ESG data disclosures and the numbers look good and align with the benchmark and they're quite complacent about their practices? Or would you rather a company that is disclosing its ESG data, it's not top notch, but you know what? It has plans to improve its E, its S, and its G. So just reporting and being complacent about it is not where we want to be. It's really how we leverage and use ESG data internally first, and then absolutely for investors and for the market, and to promote the brand equity and the story behind what the organization is doing.
And are you doing it actually, Mr. Mebiraji? We're hearing about the third-party assurance. Do you think that would be a solution or not? And are you practicing that?
Well, since day one, we have the third party.
Oh, really? Okay.
Yes.
It's not mandatory.
It's not mandatory up to date. You can get an assurance from Sustainability Council that you gather from
No,
sustainability
I was going to
experts,
ask.
and they can just state on a statement saying that all data is. But since day one, we got one of the big five at that time, and they've been doing it for us for the past 15 years. Now we've shifted to another company from the big four now. But it's important for reliability of data, especially when it comes, let's say, for carbon emissions. You need somebody to come and make sure that the figures that you are putting in your report are the actual figures that you are spending on electricity, on fuel. So it's extremely important.
Baraji, why would you do it? It's not a requirement.
It's not a requirement, but this gives me, as Raji, as CSO, the comfort level that what I'm presenting is reliable to start with.
ESG into the boardroom. I mean, we talked about the value of ESG in terms of decision making. But I was very impressed with a client of mine the other day in a board meeting. They said it's not the bottom line we need to look at. Not to be cliche, but let's talk about the triple bottom line. Because eventually, if we have the right social mechanisms in place, and by social, I'm not just talking about the community, about my people, my suppliers, my customers, my consumers, my etc. Environment in terms of my operations, my efficiency, then automatically that's ESG, and that plays a part into that will impact my bottom line. To just have a narrow vision of bottom line is not the way forward. As if we've learned nothing else in the last 2 years, the bottom line is not the only thing that matters. And a focus on that will eliminate the value of E, S, and G, essentially.
What happened during the first cycle of reporting? What were the observations? What were the challenges that companies listed in Abu Dhabi Stock Exchange have gone through or they have shared with you? What are the results of this?
I think it's more than the level of the companies. So I think it's an overall commitment from the country, from the UAE, with the all the what it matters. So the net zero, for example, mission 2050, the United UN goals were there. The actual UAE mission 2030 for sustainability. So it's not a. I think it's like an umbrella that everybody wants to be part of it. This is one. So people did not only do this only for the corporate purposes and for the investment purposes, but also not to be behind the norm and the vision of what the country would like to achieve, and not only here but also in the region, by the way. So the competition is very high among the region for those who are actually leading this. So it's about leadership, it's about competition, it's about attracting investors, it's about getting the best stake of what you want to do. So these are the drivers for the companies, other than enforcing it. Yani what I felt is that a lot of companies maybe started to assign their IRs to actually move into becoming more of an sustainability experts as well. Some of them, I know, they have actually gone into master degrees or whatever in these areas. So there is a development internally, like companies are trying to find out either people from outside on sustainability or from, so these are the changes that I have seen. And also, the word sustainability has been added in the structure, of some companies. And the challenge here, as Maali has mentioned, is that some companies, they didn't want to actually have it at all in their structure. We can't be putting it as part of a structure. It's only a task. But if you position it right and you position it on a higher level, then it would be something that, of a focus of the company. By today, we are just in February, we already have 10 companies issued their integrated, sustainability reporting, mixed between integrated and non-integrated, which is a big number to do it earlier in the year. Normally it takes time, right? Like until June. So people are actually active. They're doing it from mid-year to make sure that they are one of the first to actually issue sustainability reports. The other impact, I think, is on the investment flow and the type of investors that are actually looking at the region now. A lot of investors that actually stopped their investments into the sustainable, companies that have sustainability have reacted back and came into the picture, not only through, once they hear that this company is part of an indices, for example, the MSCI sustainability indices, they shifted their portfolios and ensured that, there will be an investment here and there. Companies themselves, as I mentioned before, they've done, this is one of the factors also, they've done a part of a transmission of their business to ensure that they also have that embedded.
Raji, last week I've received an email from one of our clients. She just started the ESG disclosure journey. She just produced her second report, right? And she was like, I received an email from a rating agency. They're rating me. Why would they rate me? Like, she was like frustrated, So what is this rating, the ESG rating? If you could enlighten the audience, why would these rating agencies are rating like companies here in the Middle East based on ESG? And then how it's going to impact the business, how it's going to impact the investment and the storytelling and the equity storytelling and all of that.
Well, it's simple and easy. First of all, stock markets are trying to attract the best investors from outside. I know Dubai and Abu Dhabi stock markets are working very hard to get the best investors from outside, not just having only regional or local investors. So the stock markets are pushing for that. The second thing, these investors are also looking at the region here because they see that the stock markets are becoming more active and more appealing to invest in. So most of the time, it's an investor who asks these ranking agencies to look at possible investing opportunities in the region here, and they do the rating for you. And as I mentioned earlier, I was trying to go FTSE for good for the past 4 or 5 years. This year, without even talking to us, suddenly we are rated at FTSE for good. MSCI also rated us without talking to us. Sustainalytics as well. So there are investors who are pushing this, and on the other side, they want the ranking agencies don't to have a good portfolio also because investors are their clients. So when they go and talk to the investor, they tell them, listen, we have these good companies that you can invest in.
But what is happening in the market now, one of the chief sustainability officers of a big bank here in the UAE, she told me, Mona, if I want to answer all the questionnaires coming from the rating agencies, I need one full-time job in my team just to answer all of this.
I have one full-time job for this.
Why is all of this? Why do we have to answer all these questionnaires? They're not, aren't they similar?
No. Each index.
So if you could just enlighten us.
Yeah, but we're talking about carbon emissions. Some indices would look at carbon emissions per $1 million of revenue. Some indices would look at weight of shipments that I have or number of shipments. Some of them would look at CO2 emissions per employee. So different indices has different standards because they support different investors. Actually, since day one, we included a table that's called key non-financial indicators. And then in this key non-financial indicators, I say, for example, I'm cutting down my emissions by 3% next year. If I don't achieve that, I would put on the achievement 2%, and I just declare that I couldn't do that because I couldn't install a solar farm or I couldn't buy electric vehicles. So that's a point actually I wanted to come through, which is extremely important. In your sustainability report, don't mention only the good things because people see you. Yeah, you cannot hide anything, especially if you're a public shareholding company. You need to mention the good and the bad because it's a balance at the end. But when you mention the bad, you say, I have the plan for 2 years, 3 years to be able to achieve this. You'll not be shot in the head if you do not mention that. But if you hide it and somebody discovers it, that will be a huge scandal for you.